friends, welcome to this channel. Now let us start the next lecture on accounting. In the previous lecture we have already seen and learned about the history of accounting. Let us quickly revise it. History of accounting can be traced in the world, like in the countries like China, Egypt, Greece, Italy in ancient records. Also in India, we can trace the history of accounting during the periods or era of Ramayana, epic Mahabharata, then Mauryan dynasty also. During Ramayana, Ram had asked Bharat to maintain the records of incomes and expenditures of their kingdom Ayodhya. Similarly, during the epic period of Mahabharata, Yudhishthir, the king, had asked his minister Nakul, his brother, to maintain the records of the incomes and expenditures of their country. Similarly, during the period of Mauryan dynasty, Acharya Kautilya Chanakya, he had asked his disciple or king Chandragupta Maurya to maintain the records of his kingdom, showing the incomes and expenditures. Then in 1949 AD, Italian monk Lucas Pacioli, he coined the term double entry system. He first mentioned this term and about this term in his book on mathematics at that time. So today we are using this double entry system for accounting, but the history can be traced, or Lucas Pacioli is called the father of double entry system or father of accounting for that matter, due to his contribution to this subject. Today we will start and see what is the meaning, the features and the process of accounting. Actually, these are one and the same thing. The meaning of accounting itself lies in its features or the process. Now let us understand what these are. The process of accounting starts with the first step, that is identification of the financial transactions and events. We are first required to identify all the transactions or events which are of financial nature. That is, the transactions and events must necessarily be in monetary terms. Non-financial transactions or non-monetary transactions and events will not find place in accounting or records for that matter. Then second step in the process of accounting is recording. We are going to record all these financial transactions which have been identified in the subsidiary books or basic books of entry, which are called as journal or journal proper, then cash book, then purchase book, sales book, then purchase return and sales return books, bills payable books and bills receivable books. Then after recording such transactions into the books of basic entry, we then classify such transactions. Because if at all there are enormous transactions in these books, we will be confused. So these transactions need to be classified. Now we are going to classify these transactions into various accounts ledger. We are going to post them into ledger book. So posting is done of the similar transactions, the transactions which are of similar nature. Such transactions will be recorded at one place, and that one place will be one individual account. Okay. So we have now classified the transactions which we have already identified and recorded in the books of accounts. Now the next step in process of accounting is summarizing. We are going to summarize the transactions into the few statements called as trial balance, initially trial balance, then from this trial balance we will further make out an trading and profit and loss account, or it is also called as statement of profit and loss in case of companies. And lastly, the balance sheet. These trial balance, trading and profit and loss account and balance sheet, they are called as financial statements or final accounts. Okay. Then the next step in the process of accounting is analysis and interpretation of these final accounts. These accounts should be analyzed properly and interpreted, because if they are not properly interpreted or properly analyzed, they will be of no use. Our full activity will go in vain. Okay, so we need to analyze whatever we have actually recorded and classified. This analysis and interpretation of final accounts will enable the planning for future. On the basis of this information, which is properly analyzed and interpreted, we can make future plans. For example, whether to invest in a particular share or business or not, from where to take a particular loan. So such and these decisions can be taken, or planning for future can be done only on the basis of analysis and interpretation of these final accounts. And lastly, the last step in the process of this accounting is communicating the results of the above, that is all these final accounts, to the users of accounts. Now, who are the users of accounts? Users of accounts may be the bankers who actually sanction the loans, advance the loans to the business, the creditors who give the material to the business on credit, or even they sanction or advance the money for the business, then the investors who actually invest in the business, or the owners for that matter, who have invested their amount in the business, because they need to know whether their business is running into losses or profits. So this information will help them to take future informed and rational decisions, well informed decisions. Then such information or such analysis and interpretation must be communicated also to the employees or labor, so that they can know whether the company is going into profit and whether their salaries or perks can be increased or not. Then lastly, the users of accounts are also the government officers. The government needs information about the profitability of such businesses to impose or fix the rates of taxes on such profits or such business houses. So this is how the process of accounts works. It has the 6 steps. Firstly, identification of financial transactions and events, then recording of such transactions into the subsidiary books, then classifying these transactions further and posting them into the ledger, then summarizing such transactions into the statements called trial balance, trading profit and loss account, these are called, and balance sheet, and these are called as financial statements or final accounts, then analyzing and interpreting the final accounts, enabling the future planning, then communicating such results of the analysis and interpretation to the users of accounts. So this is how the process of accounting is done in every business house or corporate house, even for that matter in every small unit, that is retail business. So this is how accounting is done. So friends, subscribe to the channel, and eagerly you must wait for this opportunity to study further. Till then, goodbye.